great for our first-time home buyers. This is great for realtors, great for loan officers. Overall, this is a good time to be a licensed person that's going to help these clients out. So the interest rates, according to Freddie Mac, they're hovering around for 30-year fixed conforming loans around 6.2%. And according to Mortgage News Daily, which is a little bit more accurate, they're hovering around 6.11%. If your client is going with FHA loan, look at the FHA rates, 5.65. Even just saying the words five, just the numbers five, that, hey, we're in fives. Maybe your client can get 5.99. Those are good rates to be in. Obviously, the longer your client waits, right, the interest rates already starting to, come down. If your client is waiting for 4.99, that's not going to happen anytime soon. It will happen eventually, but you want to focus on the clients that were ready before, or they were just simply waiting for the interest rates to come down. They were financially ready. Those are the ones that you want to target. So get in touch with your database, find out what's going on with those client situation. And the simple conversation should be, hey, the interest rates are dropping, right? Are you ready to go and purchase a property? Should I start showing you now? Right? We want to see, it doesn't matter if you had a client in your database or in your KV core for a week, a month, a year, follow up with them and tell them, hey, the interest rates are coming down. Okay. Next, guys, this is a real example here from one of our clients, annual income of $138,000. Their down payment was $70,000. Monthly debt was around $300. And their interest rate, if we are assuming with today's interest rates, it's going to be 6.11. Property taxes, $6,000, right? So this person can qualify for $846,000. This family purchased the property around 750, and they were pretty happy with that. But look at the income. I want you guys to educate your clients when it comes to income. I know you guys are real estate agents, not you. You are not a mortgage loan officer, but we should still have an understanding of affordability, what is really involved. So if someone is making $138,000, right, that falls below your area medium income. So we are in New York, we're in Queens, Long Island, Suffolk, all these counties that we are in, they're in high cost area. So meaning the government says, hey, this is a high cost area, so your limits are increased. So if you're making less than $143,000 collectively, it could be husband and wife collectively, right? They should benefit from some of these things. So in our case, this family was making $138,000. The area median income is $143,000. So are there any benefits for a first-time home buyer? They never bought a house before, and their income is $138,000. Are there benefits to that? Absolutely. There are some benefits. So let's go over those. Okay. So because their income is below $143,000 and they are a first-time home buyer, there are some benefits. So the main benefits that we're talking about is saving on LLPA. So first of all, you need to know the term. What is LLPA? This is your loan level price adjustment. So these are risk-based price adjustments. So when we mentioned earlier, hey, what is the interest rates today? They're at 6.11. That's your top tier scenario. So that means that person who's getting that 6.11 interest rate, they're not as risky as other borrowers out there. Okay? There's less risk on them. But if your client's credit scores are lower, that makes them a little bit more risky. If they're putting less than 20% down payment, makes them a little bit more risky. Okay, those are the two big factors, your credit scores and your down payment. But the rule is if you're a first-time home buyer and your income is below your area medium income, you don't have to worry about having lower credit scores. You don't have to worry about putting down lower down payment. So in a normal case, if you were offering 6.11 today, or the lender was offering 6.11, and they were not a first-time home buyer, right? They were not a first-time home buyer. The lender will say, hey, you're not a first-time home buyer, but your credit scores are not that great. So instead of 6.11, we're going to offer you 6.39. Okay, that's fine. But also, since you're not putting down 20% down payment and your credit scores are lower, we are not going to offer you 6.39, but we're going to offer you 6.58, right? So you see that the interest rates are increasing. The lender is offering higher interest rate because that client is a little bit more risky. Their credit scores are lower and their down payment is less. But since again, LLP can increase your mortgage, especially with, if you have lower credit scores or smaller down payment, as we mentioned. But since this client, he is a first-time home buyer, no charges are going to be added on to his loan. So even if when they're offering 6.11, his credit scores is not that great, okay, fine. We're not going to counter that in because he was a first-time home buyer. So he still stays at 6.11. Also, he did not put down 20% down payment. He put down less. Still, since he's a first-time home buyer, still can offer him 6.11. So when your client asks you, hey, is there any benefits of being a first-time home buyer? You should tell them yes. Speak to a loan officer and they can tell you that, hey, even if you have lower credit scores, even if you're putting down less than 20% down payment, you will still save on your interest rate or still get a good interest rate. Okay? Any questions, concerns, guys? You guys can just unmute yourself and just speak up because we want you to learn a thing or two from here. Okay. Next, guys, let's talk about inventory. So interest rates are coming down, inventories is going up. Everything seems like the way it should be for being a realtor out there. So you guys can see here that for 2022 versus 2023, the inventory is a little bit higher. But in 2024 now, we're seeing it definitely on the highest end. So even from January until September, we're seeing the inventory is increasing to over 700,000 properties available on the market. Okay, so that means you should be keeping an eye on your KV core under listings. It does not matter how many clients you have. It only matters like, hey, the database with the listings available. If you're going to be serving Queens and you not serving every part of Queens, right? Maybe you just want to target South Ocean Park, Richmond Hill, Jamaica, Woodhaven. You have that covered. Maybe you want to be in a different side under maybe around Whitestone or in Flushing. Doesn't matter where your targets are. You should keep an eye on those markets and see if there's any new properties available. And this should be done on regular daily basis. If I'm a real estate agent, I should know what's available. I don't want my agents uh, I don't want to hear this. I heard this a couple of days ago from one of the clients. Hey, the value for the realtor is not there because we're sending them the properties from Zillow. I said, that's great. You're sending them from Zillow, but your agent should be sending you properties that's brand new on the market. Maybe you're sending them something that's 6 months old and your agent is not seeing it. Maybe there's an issue with that property, but it should be working as a team. So when you're talking to your clients, tell them, hey, we should be working as a team where if when I'm setting up the alerts, I'm sending you anything new that's coming on the market, right? Anything in that criteria I'm putting in KV Core, you will get an alert from that. But since we're working as a team, if you see something on Zillow, anything on that, Redfin or any other apps, send me that address so I can take a look at it and show you the reason I did not send you that initially. Maybe it is really old property or is old listing. Maybe it's a short sale. Maybe it's not selling for a while for whatever reason. Let me find that out. Just send me the address and let me review it for you. Okay. Next, guys, is it a myth or a fact when your client is saying that, hey, your only upfront cost to buying a house is the down payment? Does anybody want to take a guess? Is it a myth or a fact? You just need the down payment to buy a house. Anyone? Myth. Yes. So there's a lot. Thank you, guys. So down payment is not the only expense that we have to worry about. We want to educate our first-time home buyers, right? Maybe they're going to be purchasing in 6 months, maybe a year, but you want to plant that seed with them today. Hey, start educating them. Let's, Just make sure that you don't have the down payment, guys. I need you to worry about your closing cost, and I need you to worry about your commission that you're going to pay your buyer's agent, and start educating with the new rules that we have. So they should be worrying about inspection, your credit report, their insurance, their taxes. All those are going to be part of your closing cost. Okay? So let's break that down. So if it's a down payment, there are plenty of loan programs, FHA, conventional, where they're allowing you to put down 3 to 5% down payment. So we're going to go with the bare minimum. If your client has more to put down for down payment, that's really good for them. Okay? So at least 3 to 5% down payment. And then your closing costs, depending on the loan they're getting. If they're going with the FHA loan, they're automatically going to be paying 1.75% higher than conventional because of the upfront cost. But on average, you're going to be seeing 3 to 5% of your closing costs depending on the loan and the lender that they use. And you're not going to be working for free, guys. As realtors, we're going to be charging between 1 to 3%. It's all negotiable, right? So let's go with the bare minimum. If you add 3 plus 1, so we have 7% on the bare minimum. At least 7 to 13% is needed to close on a house. There are different ways of, going through this, but at the same time, when you're talking to them, if you want to just give them a rough number, hey, at least 10%. Save this up so this way there's no surprises. If you have between 7 and 13, any of those numbers should be good. So we just want to give you an overview. A first-time homebuyer is simply is asking you, hey, I have $30,000 sitting in my bank account. I want to use that. You don't want to judge them with anything because every savings that we're putting in our savings account takes a lot, right? A lot of effort to do that. So if they're saving up, tell them, hey, whatever you have saved up, when you're talking to a real estate agent or you're talking to a loan officer, just tell them, hey, there's going to be closing costs and you do have to worry about your buyer's agent commission. Okay. Next, guys, inflation data. Inflation is at 2.5, unemployment is at 4.2. Both of these numbers we reviewed last week, they're pretty much the same. It is a good news for realtors out there. Next Fed meeting is today. Today, guys, right? Today it should be the first time we should see the rate cut in 4 years. So if you're talking to a first-time homebuyer, you can tell them, hey, in the last 4 years, all we saw the interest rates were going up, right? Finally, we are seeing the interest rates come down. They're trending downwards. The longer that you wait, the longer other buyers are waiting. So you're going to be competing with more. You're going to be competing with a lot more. So right now is the right time to buy as long as you can find a property. So will the Fed cut the rates today? Absolutely. We're really thinking that they should do a rate cut today. And let's talk about how much will they do this for. Okay. On the other hand, there are some people who are out there saying that, hey, even the Fed is about to cut the rates, but the mortgage rates might not be affected as much because we are thinking that it's already priced in. Since 2 weeks now, we have seen the interest rates come down and down and down, which is a good sign for all of us, right? But will they do a 50 basis point cut today? There's a 65% chance that they should do this today compared to even a month ago. There were 25% chance that you can see an orange here that everybody thinks that they're going to cut at least 25 basis point. That is firm, right? But will they do a 50 basis point cut? That will be a surprise. If it is a 50 basis point cut today, the interest rates should definitely have a big movement. But if it's only 25 basis point, maybe we'll still see around 5.99, 5 point, or maybe 6.1 evenly. So pay attention to the news today. See if you can. It's gonna happen around 2:30 today, so you could watch it on YouTube or just read up on it a little bit later, and just see if there's a 25 basis point cut or 50 basis point cut today. Okay. So the interest rates are dropping, which means that your dream house is closer than you can think, and that's what you want to tell your clients that hey, 6.2, even that was an 18-month low rate, and 6.11 that we just showed you is even lower. Okay. So if the interest rates do go down, do you think that the prices will come down? Absolutely not. It's just supply and demand, right? So look at this chart here, guys. This is from our MLS one key chart. from January until August, and this is for Nassau. So last year, pretty much we saw the prices average there around $700,000. So you can see in January, February, March, April, and even in May, all of them you're seeing average of $700,000. And we're seeing about 8% increase in price change for this current year. So if you bought a house a year ago, you already have built equity in Nassau. Some of you guys already closed deals in Nassau County. Your clients are really appreciating that you found them a property and they're building equity. The same client, if they were to purchase the property today, maybe instead of buying it for 700,000, maybe they're buying it for 725, 730, or as high as 760. Okay, these charts, you guys can show it to your clients. You guys can take screenshots when we do share these slides with you guys and have that as a helping hand. Look at this one, one key stats. The interest rates are dropping, and now we're going to see the prices go even higher. Okay, there's another chart just showing you exactly the same thing here. The highest end around 760. Okay, so overall, when you're paying off the mortgage, you're building equity. Equity is your profit. Use this term when you are a real estate agent. Use this term, hey, you're buying a property today to build equity. You want to build equity, so this way when you sell that property, that money that you have, that can be used for retirement, to open up a new business, for your savings, anything that you like. That is your money after paying off everybody, right? Overall, home equity has been increasing for majority of United States here. Okay, nearly 2 out of 3 people household own their house. We see that in New York is a little different, but overall, around 2 out of 3 household own their own house. Okay, New York does have the lowest home ownership rate in any state, which is about 53% in New York compared to 77% in Virginia or West Virginia, right? So we can help make that stat a little bit better by converting renters to home ownerships. Okay. And how about the people who already bought a house and they don't have any mortgage? That means if they were to sell that property today with you, they don't have any payoff letters, right? Usually we see a payoff letter for $200,000, $500,000, $800,000, because that's what they have to pay back to the loan, to the lender for their mortgage. But look at the stats here, guys. Since 2010 until 2023 here, that we have seen that the share of homeowners that are mortgage free have increased. That's a really good sign. So around 39.8% of the homeowners don't have any mortgage. That's nearly 40%. And you want, even for yourself, if you have a mortgage, you want to make extra payments so you can get rid of that mortgage one day. And, basically when you sell that house, all that equity that you're sitting on, this is all yours. Okay. So guys, if you want to tell your clients, hey, how you going to be there, some investors out there who are purchasing a lot of properties, using them as rentals, right? But if someone is looking to be an investor, you want to tell them, hey, first you got to invest in yourself, right? You want to read the books, attend seminars, anything has to do with your real estate. You want to increase the potential of your earning potential. Whatever your money you're making, saving is one thing. Saving is good, but you want to make your pie bigger. You want to make sure that your enough income is coming in. And if you want to save money, that means you have to be frugal. You have to be cheap when it comes to your spendings. You want to save more than 50% of your income if you want to purchase a house or you want to have multiple rental income properties. I have known I know plenty of people who own more than 5 properties. There are few people who own more than 10 properties and using everything as rental income, right? Whenever their time comes, either they can just sell one property for whatever needs that they have, and they might come to you. Okay. On the other hand, on the negative news is your homeowners insurance policies. In New York, we have seen home insurance policies have increased, but look in Florida, guys. This is one of the reasons where majority of the home carriers are increasing their home insurance because of states like Florida. Nearly 20% of the homeowners are paying at least $4,000 in home insurance. That's nearly double than what we pay in New York here. So if your client is talking to you and saying, hey, I bought a house, the home insurance is going up, just tell them to shop around. Just call up different companies, just shop around and see what rates they're giving you. But overall, the prices for home insurance have gone up. Okay. Some of you guys talk about, hey, I have a listing and I can't sell that listing, and it's been, 3 months, 6 months. Some listings will take a longer time, especially you have a luxury property. Celebrity like Michael Jordan, he had a property listed on MLS or with one of the agents since 2012, right? For $29 million dollars, and is finally under contract for $14 million dollars. There are some agents of ours who are getting into luxury properties or looking for a higher, but just be prepared. If you have a listing, it's going to take a little bit longer to sell that property because the pool of buyers is a lot smaller. When you have a property less than $1 million, you should be going under contract in about 40 days. If you're not going under contract in 40 days and you have a listing less than $1 million, check the price, see if you have to make adjustments. Really ask yourself, are you really hosting open houses? Are you really showing it to enough people out there? Or if you're not, the seller is paying attention to you. The seller will make that decision. Hey, your time is up. I need to work with another agent that can really sell my house. Okay, so take some action if there's no activity, if you have a property less than $1 million. Okay. Is it a seller's market? Is it a buyer's market? Every market is different. Every zip code is different. Every city, state, everything is different. So if we were in Freeport in New York, it's slightly seller's advantage, score of 41. But if you're in Springfield Garden, the score goes up to 44. So still a slight seller's advantage. But if you're in East Meadow, you're definitely in a strong seller's market. You can't lowball in your strong seller's market because they're already getting enough offers. So anytime you're making an offer, I want you to go to altos.com, and do the research and send them this screenshot to your client. Hey, we're putting in an offer. It is a seller's market in there, and I want to make sure that our offer gets accepted. If it is a buyer's market, then you should put an offer that's going to be on the lower end. Okay. All right, guys. Any questions, concerns, guys, just speak up and so we can talk about it. Next, the term to learn is a balloon payment, guys. When we're talking about balloon payment, this is fine for investor, but this is not fine for a first-time home buyer. Balloon payment is a large one-time payment due at end of the term. So if you're getting a loan, it could be a 5-year loan, 10-year loan, but after whenever that term ends, you have to pay remaining balance. And if you're a first-time home buyer, you don't have hundreds of thousands of dollars sitting around to pay that mortgage off, right? So the best thing to do when you're talking to your clients as realtor, hey, I'm getting a loan, whatever the case is, if they're looking at a loan estimate, it should say balloon payment, no. As long as it says balloon payment, no, they should be good. There are loans where it does allow, an investor to do a balloon payment and they'll get a lower interest rate or better terms because no, the lender knows that, hey, they're going to get the rest of the money back after X amount of time, right? If you're a first-time home buyer, you don't want that. What you do want as a first-time home buyer is your bi-weekly mortgage. So some of our real estate agents recently have bought their own houses. You have worked with plenty of buyers who have bought houses. When you're just having a conversation with them, hey, how's the property that you bought a year ago with me? When you're connecting with them, right? Do you have any referrals? And when you're talking about mortgage payments, you want to tell them, hey, did you set up a bi-weekly mortgage? And maybe not all the loan officers are explaining this. So you have to tell them, hey, even though your mortgage is $4,000, that amount is not going to change. That is still going to be the $4,000. But instead of doing it every month, $4,000, let's do it every 2 weeks for $2,000. Okay. End of the year, the lender is going to receive one extra payment of $4,000. What do you think that's going to happen with that $4,000? That is hitting the principal and it's cutting down years. So let's say you had a 30-year mortgage, maybe that $4,000 is going to bring it down to 28 years, right? Just giving you a scenario. So the more you spend towards your, if you set up a bi-weekly mortgage payment, is going to be hitting the principal more, and you're going to be saving on interest, and you're going to be cutting down the years. And it's always recommended to all the borrowers. It could be a first-time home buyer, it could be an investor. As long as you have a mortgage, you obviously need to pay that mortgage every month. Why not do it bi-weekly and have one additional payment, which is going to be at end of the year for the lender. Okay, so you do want to recommend that to all your borrowers. Okay, so this was one of the on Twitter, right? One of the tweets there. It says, "I was looking for a realtor who's willing to set up automated listings for future properties before having a pre-approval on hand." Right? We want to see the market, right? Would you help them or not? That will depend on your situation. If you're a brand new agent versus an experienced agent, right? If you're an experienced agent and you have 20, 30, 40, 50 leads in your database, maybe you say, hey, I'll skip this. If you're a new agent and you have about 4 leads, less than 10, I would highly encourage that you do help them out. Okay? If you're super busy closing deals on regular basis, no problem, you can skip it. But if you're a brand new agent, or even if you're an experienced agent but you don't have enough leads, remember you can set up all these alerts in KV Core in less than 10 minutes. If you're really expert, I have seen agents do this in 3 to 4 minutes. Okay? So it all depends on you. When you look at these tweets like this, you should reply, yeah, of course I can help you out. Which market are you in? I'm in New York here. Let's get started. Okay? So I want to show you guys in here. Now, once you have set up alerts in KV Core, right, we're looking at the timeline, and this is where all the activity is happening for your client, but we're clicking on alerts. We're setting up an alert. I just want to talk about two different things here. One is that when you set up the alerts, first time, you should be sending them using this link. It says text recent results. When you click on this, you should always mention your name, your company name, because this is the first time they're getting a text message from your KV Core smart number. Okay? So you should introduce yourself. So once you set them up, they're going to get 43 results. When you do send them this link, what does your client sees? Your client, when they click on it, they will see a page like this. It has the map, which you have selected, which area they want to be in, and they will see all the properties. And you can see there's 43 results there. If they don't want to see the map, they can click on map here and choose the grid icon here and view all the properties, all 43 like this. Or they can do a list, okay? Everybody has different preference, but your client has all the options. This is by default. They see the map where you have set up. The map is really good. Maybe they can say, hey, you didn't include full Beth page. I really want to be in Beth page. Include that, right? So you can go back to KV Core and make those adjustments. So your client, when they click on this 43 properties, right? They see all these properties here. They like this one. They're going to click on the details, and they'll get all the details. Since you're the one who's sending them this link, they will be on your website. Okay, so that is the first step when we're setting up alerts for them. The second step is to follow up on regular basis. You have set up the alerts. Your KV Core is sending them the alerts right in the email, but not everybody checks their email, right? So what we want to do is to send them a text message just for that one property. So you want to keep an eye on this recent results, see which is the new property. Let's say this is the one that I want to send them. I click on that property. I click on more actions, send via text. Okay? And I'm sending them this. I highly recommend before you click on more actions and send via text, copy the address so they know exactly which property this is for. So I copy the address first, just that 96 Cliff Ave, more actions, send via text. I believe this is Narinder. And before my message here, I want to include the address. So as soon as he sees a message, hey, the message is coming from Harjeet, and I know this is for 96 Cliff Avenue, and it says, I think you may like this listing, right? Keep it as simple as that. Make sure you check this box and click send. You should be doing this step at least 10 to 20 times a day with different clients. You should be sending 10 to 20 different properties to different clients as long as you have set up the alerts correctly, right? There are times where they're telling you, hey, I just want to be in this particular area, and then they do end up buying in a different area. You don't want to miss out on those opportunities, guys. Okay? Send them these properties on a regular basis, share the links with them on a regular basis, keep an eye on the inventory on a regular basis. That is the only way we can tell them, hey, we are professional enough to help you out because I know the market. Okay? Any questions, concerns on KV Core, guys? Let me know. Okay? Next is that for some of our agents say, hey, buyer's presentation. Somebody wants to do it virtually. Could I do it? Of course. If you can't meet them in person, you want to do it virtually, doesn't matter. Just make it happen. When you're meeting them in person, it does have a lot of positive things. You have their attention, they're paying attention to you a lot more better than they're sitting at home, right? The questionnaire that you're going through, some people say, hey, I just already know what I need to ask them. Great, that's good for you. All these tools are there to help you out, right? If you don't need them, it's perfectly fine. But if you want to close enough deals, we want to be professional, then you do use them. Okay? You're adding them to KV Core, you're setting up alerts. There is a difference when you're setting up alert right in front of them versus you're doing it by yourself. When you're doing it with them, the map is one of the biggest one. Hey, I don't mind going a little bit this way, going this way, south, north, doesn't matter what it is. Okay? So you can really, pick the area together. When you do set up the alerts and you see 43 properties, maybe you can skim through together. Hey, is this property good? Is this property good or not? The point here is that you're bringing value to them from day one. When you're sitting with them, you're telling them the presentation should take about 20, at least 20 minutes, where you're going through all the steps. The questionnaire, less than 5 minutes. Setting up in KV Core, less than 5 to 10 minutes. And then reviewing those alerts with them in the office will make a big, big difference for you. Okay? And once they're ready, the buyer's template and signing all those documents, doing it in person, that is the best time to do it. But not everybody's going to be ready to sign those documents with you, right? You can say, hey, I can email you right now. You can review them. Here's a hard copy for you if you want to do a wet signatures. I just need these documents signed before I start showing you the first property. I can, I have gave you all the presentation. I asked you the right questions. I already set up everything in KV Core. I'm sending you the properties. Now, any property that you do want to see, before I can, show you that, I do need these disclosures signed. Once we have these disclosures signed, then just make sure you're showing them nonstop until you're under contract. Okay. So I want to take you guys on transaction desk here. Okay. So I hope everybody knows how to get to transaction desk. One way is going to ljagent.com, Realtor Tools. If you don't know PIN, guys, just ask. We can provide that to you guys. Click on Transaction Desk. Okay. So we're going to see this file here. This is by Raj. Recently, he's doing this. So we're going to click on Forms and Exclusive Right to Represent. Okay. Just how we said KV Cores is super important, transaction is super important as well because all the documents are there. So I want every one of us to be expert in both of these tools because this is what we're helping them out, right? If you're not using these tools, you're going to be really having a hard time getting these documents signed. So when when you see this, I hope you guys notice when I clicked on this, it says exclusive right to represent agreement, but this is the old agreement. How do I get the new agreement if you have already set up an old file here? You're going to click on add, click on search and just type in LIBOR. Under LIBOR, you can see all these new forms that the LIBOR has updated, and we're looking for exclusive buyer's representation agreement. I click on that and click on add. Okay. Now you will see that it is listed all the way on the bottom here. I click on that, and now we can go through this agreement. Again, the first is telling you what is your responsibilities, right? Then it comes to your fees. When it comes to your fees, this is where you're putting the percentage in letter A here. Okay? We don't need to do the lease one unless your client is going to lease or rent a property and then purchase it later. We don't see those a lot. So majority of the time, you simply showing them properties and you can put in X percent that you're going to be charging them. Okay? You do want to disclose right away that, hey, seller's payment through offer. Upon buyer's request, broker can attempt to collect some or all of the broker fee from the seller side. So even though I'm asking you that for my service, I need to get paid, just to give you an example, 2% for this deal. If I can get 1% from the seller, it's perfectly fine. Then you owe me only 1%. Okay? The total amount that you want to charge. So some of you guys are putting down lower percentage and then the listing agent is actually offering more. So you want to keep that in mind that you should put a little bit higher percentage here and have a conversation. And one of the agents asked, hey, earlier, if I put in 3% here, right, definitely on the higher end, and there's the sellers is not paying any commission, could I reduce this 3%? Yes, you can. You're the one who's accepting those funds. As long as you agree, you can reduce that to whatever you guys want. If the seller is paying half of that, then you maybe don't have to decrease it. But if there's nothing getting paid from the seller side, you can definitely decrease your whatever you guys agreed on. That depends on you. Okay. C talks about if you find a property that's going to be leased, right? Again, you want to put a percentage there or cross that out. D is pretty important, guys, right? This is where you're putting in if the buyer purchases a property that the broker showed them within X amount of time, right? So let's say you show them a property and your agreement has ended and they still want to put in an offer, but they don't want to renew your agreement. This is to protect you. Hey, I showed them this Saturday. My contract agreement expired on Sunday, and then on Monday they do want to put in an offer, but I showed them that. So you can put in X amount of days, maybe 2 days, maybe 7 days, maybe 30 days, whatever you guys can agree on with your buyer is super important. Okay, and you want to tell them that. Next, length of agreement. Typically, whatever you guys can agree on, you can always renew it. You can always extend it, right? Or have a new agreement once this one expires. So, best thing to do is tell them, hey, it is best for me and you to do it maybe 3 months contract. Is that okay with you? Oh, no, 3 months is too long. Let me see if you can do 2 months. Okay, whatever you guys can agree on. Again, everything is negotiable, right? Some of the agent says, hey, I don't mind doing it for 30 days. I personally think that's really on the lower end. 2 to 3 months might be a good term. There's some clients or agents, they don't mind doing it for a year. We say, hey, I know we're going to find a property. Those are going to be rare cases as well. And when we're putting in for property, guys, right? Either is a residential property or is going to be a residential income. When we see residential income, that is for your investment properties. Or are they buying a vacant land, or is it condo or co-op, right? You can check those off. And for your geographic area, which area they want to be in, I would recommend putting in counties. Hey, we're looking in Queens, we're looking in Nassau. If we can find it in those two, good. If we're looking in Bronx, I would put Bronx there. Whatever your county is, go with that. And when we're coming to bathrooms and bedrooms, put it the bare minimum. If they're looking for three, maybe you can put down two. At least we need two. Okay? You don't want any of these things to change later, and then your client says, hey, no, look at our contract or agreement here. It says, hey, I was looking for 3 bedrooms, but now, I found only 2 bedrooms and I'm okay with that. Right? We don't want that. Same thing for your price range. keep it a little bit in a higher price range or have a larger gap within those price range to protect yourself. Okay. Anything else you want to fill out there? That's great. Otherwise, read, go through these rest of the terms and make sure you understand all the lines, right? This form that we feel like is going to be there for many, many, many years. So the best thing to do is learn this. So this way, when you're talking to your client, you understand every line. If there's a line that you don't understand, just highlight it, send me a screenshot, and let's review it together. If we can meet in person, great. Otherwise, let's just, do it over the phone. The point is that agency disclosures and your anti-discrimination forms, you guys understand it pretty well because we have been using them for quite some time. But this buyer's agreement, you need to understand it and then explain it to your client thoroughly so this way they can stick with you. Okay? Guys, questions, concerns on this? Okay. Couple of stories that I'm hearing from our agents. Hey, this client, since I send them this agreement, I'm not able to connect with them. That simply means that they don't want to sign your agreement and they're just scared. So you can have that conversation. Hey, I can send you the properties. If you do like a property, you want me to start showing you. Before I show you the first property, I need this disclosure signed. Okay. So guys, we just feel like maybe 20 to 30% of the buyers agents is going to be out of the market in next 1 year just because of these rule changes. The best thing to do is to, especially with the experienced agents, guys, we know that when there's a change, we just got to adapt to it. And if you're a brand new agent, we have few new agents that just signed up and he had nothing to worry about. I say, hey, all the training, everything that we're doing is with the new forms, right? With the new changes. So he has no problem. But experienced agents, we have to go through that and adapt to the new changes. Okay. All right, guys, let's go back to the meeting. So just remember, guys, if your agreement is 2%, listing agent is paying you 1.5, you can only take zero point 0.5 from your buyer. Okay? Because that's what your listing agreement says, or your buyer's agreement says, sorry. So for your buyer's agreement, if it's 1.5 and the listing agent is offering 2, I would do a new agreement, make sure that it's 2 because the seller is actually paying that. Otherwise, you can only accept 1.5%. Okay. You have to explain to the client, hey, first, my goal is to get the money from the seller side. Every time I'm showing, schedule is showing, I'm asking them, hey, are you guys offering any commission so I can disclose that to you? Okay. If you have to pay from your pocket, I'm going to make a little bit lower offer to save you some money. And if we can request the seller to pay or even put in an offer with seller's concession, every one of us should know how the seller's concession should work. If not, you should set up one-on-one meeting with me and we should go through that with that. Okay. Guys, for agents that who really want to get work done in a one full day, there's a daily planner added on your realtor tools. I use this daily for years now and it really changed my life. So I hope that it can help you guys out. This is what the sheet looks like live right now, what I'm using, right? So you guys can have a printout of this is a PDF available under your Realtor tools. So on the right, you will see all your schedule from 8 a.m. until 7:30 p.m. Any appointments that you have, any showings you have, you just put in your client's name there, showing and the address at that time. And if there's no time involved, you just got to get some things done. You just put it on your to-do list, right? That you see on the left. And then on the left bottom, you see notes, any small notes that you want. And I carry that sheet with me, even though, yes, I am tech savvy, I have things on my phone and everything. But this sheet, when I write it down, it's just a game changer. It is not for everyone. Not everybody will adapt to it. Out of 70 agents, if one or two of you guys can start using this daily planner, I guarantee you it will be a game changer when it comes to, managing your time on daily basis. Okay. Maybe you can set up a time where you want to follow up with your clients from 10 till 10:30. I want to be in KV court, just setting up. Then at 11 o'clock, I just want to make sure that all the disclosures that I've sent, they're signed. And then I want to see when my schedule is for showing today at 12, 2, 3, 4, whatever the time is. It will really help you guys if you guys can use that. Okay. Guys, the time is approaching for your MLS fees. There's over $30,000 is still due. So we know it's a huge amount. We want to make sure that we can pay that off by end of this year. Oh, sorry, end of this month on September 30th. Please do not wait for the last day. Some of you guys watching this recorded, if you are not able to make these payments and you want your license to be released, please send me a message beforehand. Do not wait until the last minute. There's additional costs anytime you decide not to pay. This happened just yesterday. One of the agents says, hey, I have two invoices. I'm not able to pay, so could you take me off? I took them off, and there was still $130 balance, which we had to pay, and now he's not picking up the phone calls. So we don't want that, right? Just please make sure that you are able to pay your MLS fees on time every year. Okay? Is $596. So you can pay directly to MLS. You guys can send us Zelle and we can make the payment and send you the paid receipt. There's no additional LJ cost to this. This is just directly from MLS, and MLS needs to get paid on regular basis, on yearly basis. Okay. So after this invoice, I'm pretty sure in January everybody's gonna start asking, just like every year we do, hey, I just paid it in September. What's this new invoice? That invoice will be for one key MLS, which is around $175 per year. Collectively, this year's dues were $771. If you're a brand new agent, you're signing up for the first time, MLS does charge $200 setup fee, so you're looking at around $971. Okay. We want to give big congrats to or spotlight for our agents. One is Mickey Karen here. He has a property on 8632 164th Street. This is a three family, 10 bedrooms, seven baths, listed for 1.699. So if you have a client, an investor that's looking to purchase, please get connected with Karen or Mickey here. Another one is listed. It is a price drop for Paul's listing. This is listed on 12215 115 Ave. One family, three bedrooms, two baths. I believe the price has reduced to 749. So if you have a client for that, please connect with Paul. We have another one by AP. This is on 14953 127th Street. Two family, six bedrooms, three baths, listed for 969. And there's one property coming soon. So maybe you guys can take some action on this when it's coming soon. It's not on the market yet. It's going to be in Valley Stream, single family, three bedrooms, one and a half baths. It's going to be going for 750. So connect with Ravi if you want to show this property. Okay, guys, just ask yourself if you guys, how many leads are you working with? Rupinder brought this topic up a little bit earlier before the meeting that some of her clients are getting phone calls from our office. We do have a assistant. Her name is Esther. So Esther is calling all the KV Core clients that are archived. They're not active, right? We exported, and it's thousands of them. It's not one or two thousands of them on a list, and she's calling all those leads that are archived. You said you don't want to work with them, or they're not working with you, or they're not ready right now. So instead of wasting your time, you archive them. So our job as the office is to connect with those leads, right, and see if they are ready today. If they're ready today, our second assistant here, Sukman, she's actually reviewing it. We'll make sure that if that is your lead, it comes back to you. But if there are duplicate leads, like Rupinder was mentioning, one of our clients got a call and it was not archived, then I want to see if it was duplicate or not, right? Some of your clients will say when you try to add them, it says KV Core is not allowing them, so they might switch up the email or the phone number and still add them, right? I want to find that out. But our intentions are that so those archive leads can wake up and say, hey, I'm ready to purchase. Out of thousands of them, we just want a few of them to say yes so they can purchase the property with you. Okay, otherwise they're dead leads anyways. So instead of, thousands of them, and you know, it was just a ridiculous number, so we had to take some action on that. Okay, so the point is that we're always thinking about our clients, and we're always thinking as LJ Realty team, as the broker here, we're always putting our agents' interests first, right? So do not ever think that we will take your lead and try to give it to someone else. More importantly, we just want that lead to come back to you initially because that was your lead in KV Core. But if it's duplicates, we will figure that out. Okay. But just know how many leads are you working with. If you're a brand new client or brand new agent, you really need to pay attention to your leads. If you're an experienced agent and you have hundreds of leads, you need to start setting a time, just like as we mentioned earlier, and start following up with them and really see, hey, who's serious and who's not. You know how you're gonna say that this person is really serious? If they're signing your agreement. If they're signing your agreement, it's like getting the listings, right? You know you're getting the listing because the seller have signed your agreement, exclusive right to sell. Now you're getting them to sign, the buyers, they're exclusively working with you and no one else. So those are your serious clients. And again, we should know at least 3 to 5 of them in your head, their first names. Hey, I'm with Paul, I'm working with John, I'm working with Betty, I'm working with Khan, right? I'm working with these guys, and I want to make sure I'm showing them on a regular basis, and I can go under contract and close a deal and make a living out of my real estate license. Okay? And when it comes to loan, guys, we have